Hey everyone,
Hey everybody.
welcome to another Travel Therapy Mentor video. Tonight we're talking about filing taxes. It's that time of year again. We get a lot of questions around the beginning of January into February, March about what do you do about taxes as a traveler? So hopefully we can head off some of those questions. We've already gotten a lot this year and talk about our experience as well as like what we recommend to most people in terms of filing your taxes as a traveler. So as we go along, if you guys have any questions, feel free to ask those, but we'll try to cover things as in depth as we can, but there's always things we leave out. So Whitney's going to introduce us, and I'm going to get this video shared in a couple groups.
All right, hey everyone. For those that may not know us, my name is Whitney Aiken.
I'm Jared Kazaza.
And we're both traveling doctors of physical therapy. We've been travel PTs for going on 8 years now. We're the faces behind Travel Therapy Mentor. Many of you guys may have watched our videos in the past. We try to do videos every couple weeks on just about every travel therapy topic you can think of. We've done articles on lots of these topics as well. We have talked about this particular topic in the past, but it's been a couple of years ago. So we wanted to redo it for all of our new followers, all of the new people who are getting into traveling that maybe didn't see that old video. And then also we've just learned some new things over the years that we want to share with you guys. So as you mentioned, we'll be talking all about taxes, tax home situations. Well, tax homes we'll touch on just a little bit. Mostly this is going to be about filing taxes, but we are going to touch on tax home issues. This is just such a headache for some people. They have so many questions about how taxes work, and it can be a little more complicated when you're a healthcare traveler versus at a permanent healthcare job. So as Jared's getting the video shared in a couple of groups so more people can tune in with us live, if you are watching live on the Facebook stream, we'd love if you'd say hello. Please just drop us a comment, say hi, tell us if you're a PT, an OT, an SLP, a nurse, tell us if you're a current traveler, if you're someone who's thinking about traveling. I see that Brian is on here. Brian's a current traveler. Hi, Joseph. Hi, Megan. See a few more of you guys have signed on. So thanks for tuning in tonight. Also, before we dive into tonight's topic about taxes, I did want to give you guys a couple of announcements. The first announcement is that we are almost ready for the APTA conference, the annual conference every year. This year, the APTA CSM conference is in San Diego, which is super exciting for the PTs, PTAs, and PT and PTA students out there. It should be a really cool location for the conference this year. We've been going for the last several years. And we're really excited to go again this year. We are hosting a big travel therapy meetup at the conference. So we're really excited to see a lot of you guys in person. We've done these meetups in the past. The last couple years that we were able to go to CSM, it was last year, which was 2022, and then they didn't have it in 21 because of COVID, and then they did have it in early 2020, like right before COVID. So both in early 2020 and in 2022, we had huge traveler meetups. I think last year was like 75 people. The year before that, it was over 100. So we look forward to seeing some of you guys there. It is mainly open to current PTs who are already licensed practicing PTs and licensed practicing PTAs. And that applies whether you're a current traveler or you're somebody who's just thinking about traveling. So if you're going to be at CSM and you're a clinician who's thinking about getting into travel, please sign up. We'd love to see you at the event. Also, if you're just a traveler or somebody who lives in San Diego and you want to join us, you're more than welcome. In the past, we have welcomed students into the event, but for right now, we are waitlisting all the students because we think that there's going to be a really big turnout this year of a lot of clinicians, and so we're going to give priority to the clinicians first, and then if we have space, we will let some DPT students in. But I just announced that on our Facebook and Instagram pages and put the links there for you guys to pre-register for the event because it is capped at the first 80 people, so you have to pre-register or else you can't get in. But anyway, I look forward to seeing you guys in San Diego. We're super excited. Second announcement I wanted to give, we are going to be doing a giveaway this week on our Instagram page. So if you're not following us already, go follow us on Instagram at Travel Therapy Mentor. We'll be doing a pretty cool giveaway this week. And then next week, we're heading out on a road trip and we're going to be traveling most of the month of February. So lots of fun stuff coming up.
Yep. Okay, so in terms of filing taxes as a traveler, this is something that I think is very daunting to a lot of new travelers. It was kind of daunting to us. I didn't really know what to do when we first started. But it's not as difficult as you think it would be, especially if you have a fairly simple tax situation. So let's say that you only worked with one travel company the whole year and you only worked in one other state besides your home state. Maybe you didn't even work in your home state. It's not that difficult. So you're going to get a W-2 from that company and you'll have to file 2 state tax returns and you have to file a federal return. And that should, once you like understand how it all works, if you're filing yourself, it should not take that long. Where some people run into issues, and where honestly we get confused too, is there are different rules between different states. So some states have reciprocity between them. Some states you get like a credit for paying taxes in another state towards the tax burden in your home state. And that stuff can be confusing. And so if you're going to file taxes yourself, the main thing to do is to understand how the interactions between the different states, your home state and all the states you work in, how that interaction works. If you understand that pretty well and you think that you can file the multiple state returns, you can use something like Tax Act, TurboTax. We've always used Tax Act and we've always done it ourselves up until this year. But also I felt like our state tax situation was fairly easy, but there are some states that are more difficult than others. So if you're at all confused, that's definitely the time to reach out to a CPA. Some of them have pretty reasonable rates. They'll file your state tax or your multiple state tax returns, your federal tax return, any 1099s, things like that you have. And if you're at all in doubt, that is by far the best option for you.
Yeah, so we've been traveling. This will be coming up on 8 years, and prior to starting traveling, because we started as new grads, I had never filed taxes before. Up until that point, I had only had just a couple part-time jobs, nothing really serious, nothing over the threshold where I would need to file taxes. I probably could have, and gotten a return, but I didn't. So to me, it definitely seems daunting. And I know for a lot of you guys, if you go into traveling straight out of college, out of graduate school, and this will be one of your first times filing taxes, that can definitely be confusing. Or there may just be other people who have filed taxes in the past for other jobs, but they just feel really overwhelmed with the travel aspect of it. So I can understand how it can be really daunting. But once I learned more about it, and once we started doing it ourselves, I realized it was actually fairly straightforward, especially if you use these online tax software. Softwares are pretty straightforward because you basically just go through all the forms that you received and you just type what it says in the boxes. So like Jared said, for most travel therapists, if you have a pretty straightforward work history, what happens is you're actually a W-2 employee typically, probably 99% of the time. You're just a W-2 employee, which just means it would be the same as being an employee at your regular hospital job, at your regular clinic job. If you had a permanent job all year long, that employer would send you a W-2. Now, if you're a travel therapist, the staffing company that you work with sends you the W-2. And so, for example, if you only took one travel job in one state with one travel company, it would be the easiest thing in the world to just type in what it says in those boxes. It can get a little more complicated now if you worked with multiple companies in multiple states, because then you're going to have just a little more to file. But for a lot of people, it's going to be really straightforward. You're just going to type in the W-2 information, the tax software talks you through it, and really the only place it kind of gets a little complicated if you're this type of person who just has a pretty straightforward work history, one or two travel companies, one or two states. The only part it can get a little bit dicey is when the tax software asks you to file your next state, because it just takes you through a really quick and easy federal return, your home state return, and then it can just get a little tricky when you have to file that second or third state, but we were always able to figure it out.
Yeah, so let's talk about some misconceptions and some like hang-ups that people have. I've answered, I think, like 4 or 5 questions already this year on these types of things. One of them is a lot of new travelers or potential travelers think that you get paid 1099. They think, oh, well, you get this 1099 income and you have to file that differently and you have to have an LLC.
Because they think that maybe like, since we're travelers, that we're like contractors, right?
Yeah, so they think that you're contracting with these facilities around the country. That's not the way it works. And any current traveler that's been doing it for a while, you understand that, but that is something that it gets very confusing for some people the first year they file or if they're thinking about traveling. So we get this question a lot. They're like, well, what about the 1099 income and having an LLC, and what should I do about EIN numbers? And so that is all not relevant for most travelers. I think something like 95 to 98% of travelers travel through a staffing company. And if you travel through a staffing company, they issue a W-2 like Whitney was talking about. It's not 1099 income. So, there's pros and cons of that. W-2 income, when you're working as a traveler, as long as you have a tax home, you get tax-free stipends in that. If you were a 1099 employee, you have to write off your own expenses. You don't get tax-free stipends. You'd get a hourly amount, and then you write off expenses against that. So pros and cons there, but just know that most travelers are W-2, so you don't have to worry about 1099 income and having an LLC and all of that. The other thing that people get hung up on is they think that you can write off a lot of expenses. And I think this kind of goes hand in hand with that contracting idea. So they think, okay, well, I'm moving around a lot, so I have expenses driving to a new assignment. I have to get new clothes for that assignment. I have, various other expenses related to your job. And they think, well, how do I write all that off? I need to talk to an accountant or something. Well, as of 2017, with the Tax Cuts and Jobs Act that was passed, W-2 employees can't write off work-related expenses anymore. And again, this is all just what I've learned over time talking to CPAs. Don't take all of this as gospel. Make sure if you're in the situation that you ask your own CPA or tax professional. But my understanding is from talking to tax professionals that W-2 employees cannot write off those expenses anymore. So obviously that's the pros and cons there. The standard deduction went up, which means that a lot of those expenses are kind of like rolled into the standard deduction now, which most people take. And the downside is you can't write off those things, but at least you get the higher standard deduction. So it simplifies it. You don't have to write off your scrub purchases or your mileage to an assignment if your travel company doesn't reimburse you, or your new licenses if your travel company doesn't reimburse you. None of that can you write off. So very simple there. And I think those two things are where a lot of people think like, I just have no idea what to do. I'm gonna have to file this Schedule C and I'm gonna have to write off these expenses. And neither of those things apply to 95% or more of travelers.
And one thing I will say is if you, again, say this is your first time filing taxes, or you've always had somebody do them for you and you don't even understand what Jared's saying about taking the standard deduction. Basically the tax software talks you through all of it.
Yeah.
And it'll give you that option. It says, you're qualified for this standard deduction, and you just click, yes or okay or whatever. It really talks you through all of it. Basically, you just kind of go through, you put in the forms that you received, pretty straightforward. But with that said, we can completely understand where some people may just prefer to have a CPA do it for them for peace of mind. And we get that. And we get that it could just be like, that's what you've always done, that's what you plan to do, you want to do it that way. And so for some people, they would prefer to work with a CPA who does specialize with working with travelers, because they might understand a little bit more like the untaxed stipends and all that kind of stuff. So if you guys are looking for a recommendation for somebody to go through that is a CPA that works with healthcare travelers, we do have a recommendation for you. We linked to her information on a recent post that we did. Her name's Nermina, and she's been working with travelers for over 5 years now, and she's been a CPA for I think 15, 20 years. So she's very knowledgeable. She will also give you 10% off your tax filing services. We have an affiliate partnership with her. So if you mention Travel Therapy Mentor, she'll give you 10% off. So once we get done with the video, I'll link to a couple things, including her calendar link where you could set up a consultation with her if that is something you're interested in. And she's very knowledgeable and experienced.
If it is something you're interested in, you can just comment tax help below and we'll just link directly to that for you.
Mm-hmm. Yep.
Okay, so another thing that people get hung up on is stipends. So a lot of people think that, okay, I received these tax-free stipends, where do I put that on my tax return? So say you're a type of person that has filed your taxes in the past, you know how W-2s work, you know how the tax software works, but now you're a traveler and you think, okay, now I have to file my stipends somewhere and I have to do multiple state tax returns, and that's gonna be too confusing. The stipends don't go on your tax return. Those tax-free stipends are reimbursements for expenses that you incurred already. So you're not being taxed on those things, and that's not included on your W-2, and you don't put that anywhere on your tax return. That is something that the travel company would write off as one of their expenses, because they're giving you that money to reimburse you for your travel, your lodging, meals, incidentals, all of that. So again, another place where people get hung up on and they get confused. What do I do with all the stipends? All these lodging and meals and incidental per diems that I got over the year. What do I do with that? You don't do anything with it. That's not anywhere on your W-2. You don't put that on your taxes. That is a reimbursement for expenses that you incurred. So all that goes on your taxes, if you're working through a staffing company, is your W-2 income.
Which is your taxable hourly rate. So when you have on your paychecks, you'll have your taxable hourly rate that might look something like $20 an hour. And then you have your stipends or your per diems, which are, some type of weekly amount. Maybe it's broken into like $300 for meals and incidentals and $700 for housing, whatever it looks like. Well, when W-2 time comes, you only get the taxable pay. That $20 an hour times however many hours you worked that year is all that goes on your W-2, and that's all you have to report to the IRS, because that's all that the IRS is taxing you on. So you don't ever have to report your stipends. which is just makes it a lot easier. But a lot of people get really confused about that. They're like going through it and they're like, well, I never saw a place to put my stipends. That's okay, you don't have to.
Yeah. So if we talk about, it's not that difficult for a lot of travelers, and talking about how you would go about filing them yourself if you want to. Along with what we just said with the taxable pay being the only thing that goes on your W-2 and therefore the only thing that you get taxed on your the tax return that you send in, a benefit that comes along with that is the taxable pay for travelers is usually not very high. So most travelers are going to be somewhere between probably $35,000 in taxable income to maybe $45,000 a year. And along with that comes certain benefits. One of those being that for low-income filers, which we look like low-income filers because part of what makes travel great is getting those tax-free stipends. So your taxable pay looks lower than what you're actually receiving. Part of that, it allows you to file your taxes for free. So if you go to, if you Google IRS free file, we filed our taxes for free every single year up until last year because we were below that income threshold. And each site, so like TurboTax, TaxAct, TaxSlayer, there's like all these different tax softwares. They have an agreement basically with the government for low-income people, where I guess the government will foot the bill for people that don't make enough, and you can file your taxes for free with that software. And they all have different limits. So if you go to the IRS free file, you can see all the different tax software and what the limit is. So for most travelers, not only is it not that difficult, but you're probably going to be able to file your taxes for free, which is great. Where things get a little more difficult though, is like we talked about, if you have state tax returns, maybe you have like 3 or 4, and you don't know exactly how to get the credit from the states you worked in towards your tax home state, then that can get confusing. And especially depending on the reciprocity between the states, sometimes that's very confusing. Also, if you have, for example, a big mortgage payment that you're making, and you might actually qualify for, instead of taking the standard deduction, you take itemized deductions because of that big mortgage payment. For most people that won't apply, but for some it will. Or say that you have a ton of investment accounts and you've made a lot of trades. Like that was a very popular thing the last couple of years. People were making a lot of trades and options trades. So, something like that, you might want to talk to a CPA about. Yeah. If you have side hustle income, 1099 income that you have to file a Schedule C, okay, well, maybe then you talk to an accountant for that. So for most people, I think for most travelers, if you have a pretty simple situation, it's not that difficult to file on your own. And what I would recommend is at least giving it a shot. So go to that free file website, look through the ones that are available, pick one that will be free for you, start to enter your information. If you get stuck, go to a CPA. If you're uncertain about anything, you can always go to a CPA, but at least try it yourself. And it also will make you a little more familiar with the whole tax process. And I think that's good for everyone anyway.
Yeah, so just to reiterate kind of the whole process from start to end, because I feel like we maybe presented that a little bit convoluted.
Par for the course for me.
Some days we do better preparing our videos in terms of like in what order to present the information, and some days we don't do as well. And so I feel like we're just a little all over the place, but just kind of as a review, if you feel like you had a fairly simple tax year, you don't have a ton of other 1099 income, you don't have a side business, you don't have a big mortgage, you think that you're a pretty standard traveler, a pretty standard person who's just going to have a couple W-2s, and you should know by now because you should have gotten most of your tax forms in the mail already. You don't have a ton of investments, and it's going to be fairly straightforward, and you want to do this on your own. Google IRS free file. Make sure to go through that website and look at which ones are available, whether it's TaxAct or TurboTax, and click through that link. And you have to click through that link or you won't be eligible to get the free service. And we know that because for several years we used TaxAct and we were like, well, we already know TaxAct has a free file option. We've used it before, so we'll just type in taxact.com. No, if you just go to their website and go in the normal way, once you get done putting all your information in and all that, you're going to get to the end and there's going to be a fee for using their software. So start back at the beginning, make sure every single time to type in IRS free file, go through the IRS free file site, pick one of those links and use it, whichever one has the income threshold that you qualify for. And you should know if you just like roughly look at your W-2 income, like, oh, I made roughly, $45,000 taxable this year or whatever. Go through that link and then you'll start just filling in the blanks for each form that you have. It'll say like do you want to report your income from a W-2? And you say yes, and you fill in all the information for your W-2, and then it'll prompt you. It'll say, do you have another W-2? And you say yes. And then you go through it, and it usually does federal first, and then it'll say, okay, now we can help you with your home state. For us, that might be Virginia. We'll help you with your Virginia state tax. What's the word I'm looking for? Return. Tax return. And then you kind of have to just it gets a little bit tricky when you get to that second and third state because each software is a little bit different. So you just have to navigate that part. And usually it's pretty straightforward. And this might even still be the case if you have a couple of 1099s, maybe you do a little bit of investing and you have a little bit of stuff. But if you know that you're somebody who has a ton of investments, a lot of other complicated things, you have this side hustle, and there's just a lot of things going on, and this seems really confusing to you. Instead, it might just be more worthwhile to just collect all your tax documents, go to somebody like Nermina who works with healthcare travelers and say, can you help me? For a lot of you, you're going to be able to do it for free. You're going to be able to do it pretty straightforward, pretty easy. For some of you, we got through a couple times and it was like, oh, our income was slightly over the threshold, so then you end up having to pay a little bit. I don't know, what we had to pay?
Well, that was a good point you said about you have to go through that free file, and yeah, we did figure that out. And it's not really expensive, but I think for filing a federal return for a lot of the different tax softwares, it might be like $79. And then where it can get a little more costly is if you have some 1099 income, and then you also have multiple state returns, and they have additional fees for that.
Yeah, because they might be like, oh, you're a complicated tax person, so we're going to charge you an extra fee for this and this and this. So I wouldn't say we usually spent more than $100, right, to do it online?
I think like $149 last year, something like that.
So with that said, to compare rates, I'm pretty sure Nermina charges $200 for your federal, and something like $50 for your first state. And then she'll charge like a little bit more if you have another state, and a little bit more if it's more complicated. Yeah. So in comparison, it's actually not that much more to just have a professional do it for you. It might be a little bit more, it might be another $100 or $200 more. But for some of you, that peace of mind might, be really good for you. It just really depends on you and your confidence with this sort of thing. But hopefully that makes it a little bit clearer. And then just to reiterate what Jared said, as far as when you go to file your taxes, you literally just file what's on the forms. You don't need to put your stipends anywhere. We also get asked, you don't need to do anything about extra deductions. You can't write off, extra write-offs if you're just a standard traveler. If you have your own LLC and you're a contractor, yes, maybe then you have deductions and that sort of thing. But if you're a regular traveler who's working W-2 through the staffing agencies, no, you're not writing off your laptop and your cell phone bill and all that extra stuff. You can't do that. Yeah. So don't worry about that. We get questions all the time. They'll be like, at what point do I submit my tax home information to the IRS? You don't. You just, for all your tax home kind of stuff, you just keep the records for yourself in case you were ever audited. So you don't actually ever have to submit that to anyone ever at any time. You just want to keep records for yourself year after year. And this also brings up a good point. So we recently had a couple of meetings with different CPAs because this year we personally decided that our business stuff had gotten too complicated tax-wise. Both our travel income, but also our business income, that we wanted to talk to a CPA. So we set up meetings with a couple CPAs. One of them had worked for 15 plus years and one of them for 20 plus years. Both of them told us regarding audits that neither one of them has ever had a client audited. And I'm not just talking about healthcare travelers, any client at all.
Yeah.
So both of them told us that audits are exceedingly rare. And one of them, he was telling us that basically right now they're the lowest in like the last 30 years because I think something like the IRS has low funds right now and low staffing, and so they're like the lowest rates of audits ever. So that should make you guys feel pretty good that audits are extremely rare.
Extremely rare.
We've personally never talked to a traveler who has been audited. We have seen some people like in groups and stuff maybe mention here or there that that maybe got randomly selected for an audit, because that can happen. You can just get randomly selected. Any citizen can. And most of the times they'll just ask for some documentation that you have, and you would send it in at that time. But all of this to say, your tax home information and all that, you would only ever need to send it in to justify why you received those tax-free stipends if you got audited. But if you didn't get audited, you just keep it for yourself.
Yeah, and along with the audit thing, your odds of getting audited, yes, are less than 1% if you look at the number of audits compared to the number of tax filers every year. And in addition to that, most travelers are going to be more in like the middle income range, which you'd think, oh, you probably get taxed or you get audited more there, but that's actually not the case. Most audits are in the lower income and the very high income. Middle income, there's not that many audits. So what they're looking out for is people with very high incomes, like writing off things they shouldn't, and people with low incomes taking advantage of like credits that they might not be eligible for, like the earned income credit and things like that. So people with middle incomes, less than 1% of people get audited, and then people with middle incomes get audited to even less than other tax brackets. So your odds are very low. One thing that we should mention here, because I know there'll be questions about it, and if you guys have any questions, feel free to ask those in the comments. We'll go through so we had at least one that we'll go through at the end. So filing multiple state returns, like I said, that can be confusing, and that really is kind of the sticking point for most people filing taxes by themselves as a traveler. The way it works for most states, and like I said, there are some states that are weird here, but the way it works for most states is when you work in a different state. So for example, for us, our home state's Virginia. We took a lot of contracts in North Carolina. When we work in North Carolina on contract, we have tax withheld from our W-2, from a regular paycheck, that it's withheld for North Carolina state taxes. And then that always brings up the question, well, what about Virginia? What about your home state? How do you pay taxes there? Well, the way it usually works is you have your tax burden in the state that you worked in, and you also have your state tax burden in your home state. Remember, federal taxes are completely different. But you pay taxes or you have withholdings in the state that you work in. So if you work in 3 states, you withhold taxes in those 3 states. How much you owe to those states will depend on the earnings that you had in those states. For your home state, you also owe taxes there, and you owe taxes on all of your income. So a lot of people have questions about that. They say, okay, well, you're going to get taxed twice. You get taxed where you're working and you get taxed in your home state. In some cases, that's true, but in most cases, it's not. The way it usually works is you get a credit from the taxes you paid to the other state towards your home state tax burden. So if you paid, let's say your home state taxes came out to $800 that you would owe for the year, and you didn't have any withholdings because you worked in different states outside your home state the entire year. But let's say that you had 300 in withholdings in this state, and you had 150 in this state, and then you had 100 in this state. The difference is what you would owe on your home state taxes. And that's where it gets a little confusing because you have to claim that credit on your home state tax return for the states that you worked in. And normally the way that works is you file as a resident of your home state and you file as a non-resident in the states that you worked in. So that's the main sticking point for a lot of people. That was the hardest part for me, trying to figure out our taxes when we file on our own. But once you figure it out and you figure out how your home state works compared to the state you work in, it's not as confusing as you would think it would be, and you should be able to figure it out.
Yeah, so we get that question a lot, like people are worried that they're going to have to pay double taxes. In most circumstances, you do not have to pay double taxes. You essentially have to pay the higher of the 2 states.
Yes.
This can also be really confusing for people when they either come from a 0% income tax state, where that's their home state, or they work in a 0% income tax state. Unfortunately, you still have to pay the higher of the 2. So if Tennessee is your home state and you're used to paying 0% taxes, but you go work in California, you still have to pay the California taxes.
Yeah, and where this can really catch people off guard is if you're from a home state that doesn't have a state income tax. If your home state is a state that has a high state income tax and you work in a state that has 0% income tax, you'll have no state tax withholdings on your tax return, which means that you have no credit towards your home state taxes at the end of the year. And that can lead to a pretty big state tax bill. And it's not that you were double taxed or anything like that. It's just that you had no withholdings throughout the year. And some people are caught off guard with that. So, if you're in that situation, which is, not very common, there's not that many 0% tax states to work in. Just keep that in mind, that you might have a pretty big tax bill at the end of the year if you had no withholdings throughout the year.
Yeah, I think that's funny to talk about too, because I think a lot of people don't really understand taxes. I'm not going to say I understand them perfectly, but I feel like I understand them a lot better than I did a few years ago. People don't understand that withholdings just mean that you're putting some aside for what you owe at the end of the year, and whether you get some back or you owe some at the end of the year really is dependent on how much was withheld throughout the year.
Yes.
And so when you fill out the form, I always forget which form it is. Is it the W-9?
W-9, I think.
The W-9, when you don't even probably know what that is, but you're probably like, oh, well, I get all
It
these
might be
papers.
W-4. We always say this wrong.
We always say this wrong, but you know, when you're doing your credentialing with the new company and they make you fill out all these papers, well, one of them is going to be this tax form, and it says like, do you want to file single? Do you file married? Do you claim yourself? Do you claim any dependents?
Do you have extra income that we would need withholdings for?
So all this stuff that they're asking you on that form determines how much tax they withhold throughout the year on each paycheck toward your tax burden at the end of the year. So depending on what you elect on those forms, they might withhold the appropriate amount, they might withhold a little too much, they might withhold a little bit too little. And then it can result in you either owing or getting some back at the end of the year. But people will be like all upset if it, you know, everybody obviously wants a refund at the end of the year, right? But it really just depends on how you withheld it.
Yeah.
You're going to owe the same amount either way. It's just, I think they implemented that for people who have trouble saving money, because it's like, well, it's already put aside for you for the end of the year, because if you take away a little bit each week, it feels better at the end of the year than having to pay it all at once, right?
That's a really common misconception. The taxes, fun fact, taxes did not used to be that way. It used to be that you earn income throughout the year and then you receive a bill or you file your taxes and you send all the money in at once. The problem with that is most people don't do a good job saving for that tax burden at the end of the year. And what was happening is the government was sending out the tax bill, or the people were filing their taxes and they were like, oh, well, I don't have enough to pay it. And so they instated this withholdings system where basically at the end of the year you have withholdings throughout the year, and then you're just settling up the difference between what your tax burden is versus what you had withheld. Sometimes that's more, sometimes it's less, but you know what's withheld doesn't really impact your tax burden at all at the end of the year. And whether you get a refund or you have to pay at the end of the year, that doesn't really mean anything. It just means either you had too much in withholdings or too little in withholdings. So a very common misconception, I think, for a lot of people.
Okay, so I think that's most of everything that we wanted to talk about in terms of filing taxes. If you have questions, if you're watching live and you have questions that we didn't touch on, or you want us to clarify something about filing taxes as a traveler, go ahead and leave those in the comments. If you have learned something from this video, we would love if you would just hit the thumbs up button, say thank you, let us know. If you need us to clarify though, leave a comment and we will.
Yeah.
But now that we've touched on most of the tax filing stuff, we wanted to really quickly touch on a couple of like tax home questions, because we constantly get questions about tax homes.
And it seems like it's getting, I don't know if it's just because we have more followers over time, or I don't really know what it is, but we get a lot of tax home questions these days, and we're not the people to ask for that. I mean, we've talked to a lot of CPAs, we have knowledge on it, but everyone's situation is different. So, you know, coming to us and asking a question about your tax home doesn't really help you. And because, you know, if you're audited or something and they say, well, how did you think you had a tax home? And you say, well, these two random people online told me I did. Like, don't do that. Go to a CPA, ask their opinion about your tax home. And it's not that expensive. So a lot of for example, the lady that we're sending people to now, it's $50 to set up a tax home consultation. So it's much better to have that peace of mind than to ask us give you our secondhand knowledge, and then, you know, you still have questions. Instead, just go to a professional, pay them a small amount of money, have all that squared away, and you'll have the peace of mind.
Yeah, so just to briefly touch on that, if someone's watching this and really doesn't know anything about tax homes, we do have some articles and videos just explaining the basics of what a tax home is and why it is important for you to know what it is. It's really vital for you to know what it is. And it's vital for you to check your own situation and make sure that you're doing the tax home thing correctly, because the tax home is directly tied to your ability and your right to receive tax-free stipends as part of your paycheck. So if you're somebody who is taking even just one travel contract and you're letting the travel company pay you tax-free money, you need to have a tax home all squared away and be meeting all the IRS guidelines in order to actually receive that tax-free money. You can't just claim innocence and naivety and say like, I don't know anything about tax, and I don't know, the company just paid, that's what they said my paycheck would be. No, you need to look into this. It's your responsibility. Like we said, audits are fairly rare, but if you were to get audited, you would have to be able to justify why you were receiving that tax-free money as part of your paychecks. So just good to know. Definitely check into it. You can read our articles and watch our videos explaining what a tax home is and the general guidelines on how you meet it. But inevitably, everybody always has questions. They'll be like, well, the guideline says this, but see, I have this situation where I was living here, but I was working here, but I was living at my mom's house, but I moved, but I have this address. And they'll send us this whole long thing, and they're like, does that count as my tax home? And we're like, we're not professionally qualified to tell you if that counts or not.
All we can say is, based on understanding, yes or no, but I mean, that doesn't really help you. So $50 for a 30-minute consultation to ask all your question is well worth it.
Yeah, so what you can do, we'll link to at the end Nermina's information. She does tax home consults. She does tax filing. She can just do general consults if you just have general tax questions you want to ask her. But yeah, that tax home consult call, I think that should be a prerequisite before anyone ever takes a travel contract. You should pay $50 to Nermina or to another CPA who specializes in healthcare taxes, travel healthcare taxes, and just sit on the call with her and explain your situation and have her tell you in her professional opinion as a certified public accountant. Is that what a certified public accountant?
I don't know.
As a certified accountant. CPA. Have her tell you her professional opinion if your situation where you lived here and you were at your mom's house and you moved and you worked here, tell her and she'll say yes or no, or you need to do this to make sure the tax home is good to go. Because she can talk to you about like, well, if the IRS were to audit you, they might look at it and say this, this, and this. So we highly recommend setting up that tax home consult.
Yep. Okay, so going through some questions. Sarah says, what if I had an assignment that was PRN pay and no stipends? All of that is taxed, correct? Yeah, if you didn't have any tax-free stipends and you were just getting like a flat hourly rate, which like is the case with most local travel contracts, or if you travel without a tax home, then yeah, all that would be taxed and that will come on your W-2. So there's nothing different you need to do. It's just that you'll have a higher amount on your W-2 than you would if it was a normal travel job.
Yeah, or if you just have, she said an assignment that was a PRN rate, so I'm assuming you mean like a travel contract that was a PRN rate, but it would apply either way, whether it was just like a PRN job or whatever. You just put whatever is on your W-2, you put that on there. Because the fun thing about it is like they don't even put the stipends on your W-2, so you don't even have to worry about it. It's what you just fill in the box, whatever it says there.
Allie says, tax is even more fun if you worked in another country part of the year. USA is one of the few countries that counts global income. I think the US is only, I think there's only 2 countries in the world that count your income that you earn in other countries. They tax you on that, and the US is one of them, and the other one is like a very, very small country, I believe in Africa. So yeah, that's kind of a crazy thing about the US. They'll tax you anywhere you work in the world. Any income you earn is taxable in the US. And I can't even imagine trying to file a tax return for another country. I'm sure that's
I would imagine
difficult.
You would want to work with a CPA.
Yeah.
If you have international taxes. I'm sure you do, Allie.
All right.
Let's see if you guys have any more questions.
Brian says, you guys might get to this topic eventually, but when you put in your 401k and or IRA, does it matter if you roll over your travel accounts into your personal accounts before or after?
Like before or after filing your taxes, or?
Yeah, I would imagine he's talking about before or after you file your taxes. No, it doesn't matter. The money that goes into your 401k or your IRA it's not taxed, assuming that it's a traditional IRA. So that money goes in tax-free, and it doesn't matter when you roll it over. That's not a taxable event. So whether you did it before or after your tax filing deadline, rollovers are as long as you're not rolling from a traditional account to a Roth account, then you would have taxes incurred there. But if you're going from a traditional account to another traditional account, there's no tax burden or taxes incurred.
But then as far as making your contribution to your IRA for the year, you should do that. Like sometimes people will do their IRA contributions like in a small amount throughout the year. We sometimes have just waited and done it all as a lump amount. And we do that before the tax filing deadline, before we turn in our taxes. So like we still need to make our IRA contribution for last year, and we'll just transfer, whatever the limit is, like what is it, 7,500?
It's like 6,500 maybe?
6,500. We'll just transfer it all at once before April, before we turn in our taxes to be filed. Sarah was clarifying her question about the PRN. She says it was a contract, so it was a travel contract. They overhired a couple of us, so we ended up going PRN instead of doing it like a travel contract and taking another assignment at the same time, so we worked 2 travel assignments. Okay.
Yeah. So if you were working PRN there, then that's just regular W-2 pay that you should get a W-2 for, unless it was PRN. Sometimes PRN jobs will pay 1099, but I mean, it just depends on what form you get. And if it's 1099, it's a little bit more complicated because then you have to file a Schedule C. But even if you do, tax software will walk you through it, or if you have an accountant, they'll do that for you.
Allie said, yes, definitely need professional help with filing international taxes. I can only imagine. I'm sorry that you have to do that, Allie. Okay, Terry wants to know, if I work at a school system for 10 months out of the 12, and then I return after a 2-month summer break, will I be taxed on the stipends for the second year? I heard there has to be a 12-month break before you can return.
Yes.
Well, the first question is not will you automatically be taxed. It's how you choose to arrange your contract, because what you shouldn't do is just let the employer decide. You shouldn't just let the employer say, yeah, you left for 2 months, you came back, we'll pay you the same way we were paying you before with the tax-free stipends. What you should do, Terry, is you really should have, in this situation, a tax home consult, because what's in question now is your tax home status. Because what's happened is you've worked 10 months in a place, you were only gone 2 months, and now you've come back. So what's going to happen is if you were ever audited, it looks like you lived in this place more or less like 2 years back to back if you end up working 2 full school years. And so then they might say, well, why are you getting tax-free stipends? It sounds like you just live there.
Yeah.
It sounds like you live there and you work there. So this is why the whole question comes up of how long can you stay somewhere? You have to understand the underlying premise. When you get these questions of like, well, how long can I stay somewhere as a traveler before I need to move on? Well, if you were the IRS and you were the person auditing the person on the other side of the table, the traveler, you would look at it and you'd be like, well, it just sounds like you took a job as a school therapist and you live in that city now.
Is, you worked 10 months this year, you worked 10 months this year, you were at home for maybe 2 months, you earned all of your income at this other area. Why is this your tax home if you spent 2 months here and didn't earn any income here? Mm-hmm. But you spent 10 months, 2 years in a row at this place. And there are court cases that have the rulings have shown what the IRS interpretation of this is. And any accountant, I think, that you talk to, anyone that we've ever talked to, will say that if you work more than 12 months in any 24-month period in the same metro area, then that area becomes your new tax home, which would mean that then you're not eligible for stipends. So when you start that second contract, you might be able to work a couple months still as a traveler, but then when you start going into your 13th and 14th and 15th month that you've been there in any 24-month period, then you're going to be taxed on that money. And not only are you going to be taxed on it, but then that area will become your new tax home. So then if you decide to travel somewhere else after that, then it's kind of confusing because now you have this new tax home and you have to figure out what to do with that. So not the best idea to do that if you can avoid it. But if you really want to be there or you plan on moving there, then it might be worth it to like get rid of your tax home. You won't get tax-free stipends, but you'll still probably make more than you would as a permanent employee, which is great.
And this just goes back to understanding the definitions of the tax home, because a lot of you are like, well, I know what my true home is. My permanent address is my true home. That's my tax home. But the IRS doesn't care about what you feel in your heart is your true home and where your mail goes to. They care about where you earned income. So this is why a tax home isn't just simply an address. A tax home has a lot more to do with where you conducted business for the majority of the year and where you earned income. So you're going to get yourself in a really sticky situation with your tax home status and eligibility to receive these tax-free stipends if you stay somewhere for too long. So that's the premise underlying these guidelines. But yes, it's been our understanding from talking to CPAs, they generally don't recommend that you stay anywhere longer than 12 months within a 24-month period. So we always tell people when they ask us this question, it's best not to stay more than 12 months. And even if you stayed 10 months, no, you shouldn't only take 2 months off and then go back and receive tax-free stipends. So if you decide to do that, you want to work in the same school district the second year in a row, the second year you're probably going to need to take it as taxed income. But again, this is just our understanding based on having spoken to CPAs. If you are somebody who does school contracts and the school district wants you back again, I would highly recommend you set up a tax home consult and talk to a CPA about how to handle that situation and how to receive your paychecks in the future.
Yeah, and even more than that, there's other rules and other like court cases that have kind of shown what the IRS interpretation of these guidelines are. And another one of those is that if you earn the majority of your income in a certain area for 3 years in a row, so say you take 2 contracts per year in a certain area and you take the rest of the year off, but you're going back to the same place 3 years in a row, well, now that again looks like your new tax home because you've earned the majority of your income there 3 years in a row, and you're not really earning income at your home location. So there's a lot of things to consider, and it's always best to talk to a CPA and just ask for their advice on that.
Yep. Alrighty, guys, do you have any more questions for us about taxes, tax home issues, any of that kind of stuff? If you do, please leave a comment. If not, we'll wrap up. We're always available for questions. If you do have general questions, you can send us a message. But in most cases, we're either going to direct you to one of our general articles explaining generally how tax homes work or generally how taxes work and say this is our understanding of it, or we're going to say it's a really good idea for you to set up a consult with a CPA so you can get the best professional advice. Because ultimately, like Jared said, if you were to ever get audited, which is really the risk with all this tax stuff, right? We're all scared we're going to get audited and we're going to get in trouble and we're going to have to pay penalties and pay back taxes and all that stuff. You would really want the confidence knowing that you've talked to a CPA about your situation, right? So that's why we recommend, if you have concerns, if you have questions, talk to somebody who's trained in this stuff. Talk to a CPA specifically who works with healthcare travelers like Nermina. We'll link to her information at the end of the video if you guys do want to set up a consult with her or have her do your taxes this year. She will give you 10% off of filing your taxes if you let her know that Travel Therapy Mentor sent you. So just mention Travel Therapy Mentor during your consult and she'll give you 10% off.
Yeah, and her rates are extremely fair. We interviewed several CPAs, and I mean, if it's between paying $150 to a tax software service that you don't know if you're doing things right, or $250 to a professional that will answer your questions and do it for you, I think it's a pretty easy choice. If you're in a situation where you can file for free and your taxes are pretty simple, then yeah, okay, maybe do it yourself or at least try it and see how comfortable you are with the multiple states and all that. But if not, that's a very reasonable rate.
Yeah. All right, guys. Well, hopefully this helped to clear up some of the questions you have about taxes. I know for some of you guys it might still be really confusing, and that's okay. That's why they have CPAs out there. If it's not something that you want to deal with, we get it. For some of you, though, if you're the type of person that wants to do the research and you feel pretty good about it, you just trust me when we say it's not as complicated as it seems once you really get into it and kind of just do a little bit of study on your own. But we respect your choice either way you decide to go.
Yep. All right, everyone. Thanks for joining tonight. Again, if you could like this video, we really appreciate it. Let us know what you thought. If you had any questions or any comments about anything we said, were we wrong about anything? Last week I kept saying the long division sign, and I was wrong about that. I think it was it's actually a radical sign or something.
No one knows what you're talking about.
Someone pointed it out.
Yeah. Anyway, all right, guys. Hope this is helpful. Stay tuned on our Instagram page for the giveaway this week. We hope to see you at CSM if you're a PT or PTA that's going to be going there. Yeah, and we're getting ready to go on a road trip starting next week, so follow along on Instagram.
All right. See you later.
Bye, guys.